Hi. Bitcoin hit $126,000 in October 2025. Then a crisis hit. By early 2026, it was down to $74,000, a 41% drop. Meanwhile, gold hit an all-time high of $5,589 per ounce in January 2026, up 80% in just 1 year. Simple math, $10,000 in gold at start of 2025 is $18,000 today. That same $10,000 in Bitcoin is roughly $8,000 after the ride. Right now, gold is clearly winning. But that's not the complete picture, and the full story is what actually matters for your money. To get the real answer, you need to understand what problem each asset was designed to solve in the first place. Gold has been a store of value for 5,000 years. It's scarce, indestructible, and universally recognized. Central banks hold over 35,000 tons of it right now. In 2024 alone, central banks bought over 1,000 tons of gold, the highest rate in decades, to reduce dependence on the US dollar. Bitcoin is 16 years old. Born in 2009 as a protest against money printing. Its supply is hard-capped at 21 million coins forever. No central bank can change that. The key question, when a crisis hits, which one actually protects you? The answer depends entirely on what type of crisis it is. Test 1: Geopolitical crisis. When the US-Iran conflict escalated in 2026, oil spiked, gold immediately jumped. Bitcoin barely moved, then fell. BlackRock studied 6 crises between 2020 and 2025. In the first 10 days of every single one, gold outperformed. Bitcoin lagged or fell. Gold is the short-term panic shield. Why does Bitcoin fall first? It's the most liquid asset on Earth, trades 24/7. When panic hits, institutions sell Bitcoin immediately to cover margin calls on their other positions. Why does Bitcoin fall first? It's the most liquid asset on Earth, trades 24/7. When panic hits, institutions sell Bitcoin immediately to cover margin calls on their other positions. But after 60 days, the story flips. When tariffs hit in April 2025, gold rose 6%. Bitcoin surged 23%. Bitcoin is the recovery trade. The cycle is now predictable. Crisis hits, gold spikes. Panic fades, gold profits rotate into beaten down Bitcoin. Smart money is running this playbook in 2026. Now test 2: Currency collapse. This is Bitcoin's real superpower, and the evidence is undeniable. Turkey's lira lost 85% of its value since 2015. Bitcoin adoption surged. Citizens used it to escape their own government's money. Argentina's peso lost 98% of its value over a decade. When governments destroy their currency, Bitcoin wins. People there learned this the hard way. The core distinction: gold protects against sudden geopolitical shocks. Bitcoin protects when governments slowly destroy their currency over years. Long-term scorecard: from 2015 to 2025, Bitcoin annualized over 60%. Gold returned 8%. Bitcoin is the best performing asset of the decade by far. But those returns came with brutal crashes. In 2022, Bitcoin fell 65%. Buyers at the top waited 2 full years just to break even. Gold broke 50+ all-time highs in 2025 alone. Gold ETFs attracted a record $19 billion in just 1 month, January 2026. Institutions are rushing in. Goldman Sachs, JP Morgan, and most major banks all have high price targets on gold for 2026. The biggest money in the world is betting on it. Bitcoin ETFs launched in 2024 have already attracted double the money of gold ETFs in the same period. Institutional money is choosing both, not picking sides. The correlation between gold and Bitcoin hit a historic low in early 2026. When one goes up, the other tends to go down. For your portfolio, that combination is powerful. What do serious strategists recommend? A small gold position for defense. A small Bitcoin position for potential upside. Not either slash or both sized correctly. Think of it this way: gold is insurance against geopolitical chaos. Bitcoin is a bet that the monetary system itself eventually breaks. Ray Dalio said it best: gold is not an investment. It is insurance. In 2026, the data is clear: for sudden crisis, gold wins the first month. For long-term currency debasement, Bitcoin wins over years. Treating them as the same thing is the real mistake. So which one survives the next crisis? Both, for different reasons, on different timelines. The real question is, what kind of crisis are you preparing for?
And if this finally made sense, hit subscribe. I break down economics like this every single week. See you next time.